In the meantime, the markets continue to be affected over the concern of the possibility of a widespread of coronavirus. Currencies of Russia and Mexico sank more than 7% today as crude oil lost more than a quarter of its value after Saudi Arabia launched a price war with Russia, adding to fears of a global recession. Meanwhile, gold prices hit a more than 7-year high and drove investors to safe haven assets, although profit-taking later unwound much of the metal's rise. Spot gold touched its highest since December 2012 at $1,702 before being knocked back to $1,676 per barrel. For more on the markets, we're joined by Lavan Gopaul, who is director at Merchant Africa from our Durban studios. Well, Lavan, from last week, as we track what happened over the weekend, there's been risk aversion, also global markets melting down, and currencies as well as commodities markets were in turmoil. So you've been tracking the markets, especially since you entered the studio. What has been your observation so far?
So firstly, we've had a number of factors that have affected markets. The most important factor in the last few hours has been the breakdown in terms of the OPEC agreement between Russia and Saudi. The reaction has been a supply or a threat of supply from Saudi. It's pushed the oil price significantly lower as it's traded through some of the other international markets. As the Dow opened today, there was an indication that we'd see a dip of more than 6%. It had opened past 7%, falling more than 2,000 points. This signified a circuit breaker, and the reaction was that the Dow Jones was closed for 15 minutes. The last time we saw these sort of events was during the middle of the financial crisis, where large swings in markets had to create a cooling period, and so they shut down markets for a period of time. After the Dow resumed activity, it started to trade slightly better from its 2,000-point dip, but at the moment it's still almost 6,000 points off. All major markets across the planet have fallen in a similar vein. This is a massive overreaction, possibly, to the dip in the oil price. What some of the features that we can take away from this is, as the oil price falls by almost 30%, there is a sharp dip in terms of various energy companies and related businesses. The margin call for a number of traders that are trading the derivatives of these signifies a shortage in terms of cash. And so they're dumping almost anything that they can just to try and create a little bit of liquidity and to meet some of their cash needs. So there is massive selling in almost all major markets and across most sectors. The South African impact, of course, is a major sell-off in Sasol as a result of that dip in the oil price. Bear in mind that Sasol, having lost significantly over the last few days because it's been downgraded in terms of its credit worthiness, but of course this dip in the oil price has created even more selling pressure, with Sasol trading below 90 Rand at some point today.
Okay, Lavan, one would wonder if currencies and oil could continue to plummet any further than this, and more so that when you say that there's a massive sell-off and the direction could be the safe haven like gold. But I just wanted to also check on how the pharmaceuticals have been performing. We saw on Friday they ticked up massively, more especially now that there's fear and speculation that the outspread may be advanced to other countries that may also impose travel restrictions. So which other direction may markets take if it's not safe havens?
So there's a few different takeaways with respect to the coronavirus in particular. The pharmaceutical businesses, those businesses that are involved in different aspects of of health products. So I'm thinking of face masks, sanitizers, etc. There's been general demand for that. On the shelves, you're probably seeing a sellout in terms of hand sanitizers and other sort of related products. So, of course, demand comes through for pharmaceuticals. At the same time, businesses that are connected with tourism, with travel, have seen something of a slump. Sell-off in terms of airline stocks as well as tourism and related stocks probably hurt that end of the market. It will be an uncertain period until we see something of a relief coming through from science in terms of some sort of a discovery to put an end or create some comfort with regards to the coronavirus. A real aspect of this virus is the fact that genuine growth seems to be halted. It's created a massive speed bump in terms of growth, particularly from the Chinese perspective. Of course, many other centers have also seen a slowdown in terms of production. Italy in particular, and of course the US, you've seen certain areas now being declared as a state of emergency. New York is a state of emergency as was declared this weekend. And this creates a real problem in terms of general production and trade. You'll also find that if many people decide to restrict themselves to their homes as they are not interacting with the general public, or they're away from work with leave or without leave, as the case may be, will also affect productivity. And now, because we have such good communication with the internet and other communication tools like WhatsApp, you find that people are aware of the problems of coronavirus. And so they're confining themselves. They're not going into work, and that also affects production. So unfortunately, global growth could be hurt by as much as 0.5%. Certainly, China's growth may dip by at least 1%. So there are genuine ramifications in a macroeconomic level, notwithstanding the immediate reaction by some of the companies that are involved, as you mentioned, pharmaceuticals, and of course, you look at tourism and other related businesses.
All right, talking about tourism is something that we'll touch on, but thank you very much for making time to speak to us. Lavan Gopaul, coming to us from our Durban studios.